Welcome to the Movers and Shakers podcast, where real students are doing real deals in the world of multifamily real estate. I'm Vince Gethings, the owner of the Wheelwell Profits Academy. Listen in as we dive into the journeys of driven individuals who are turning their dreams into reality. These people are just like you, taking action and making things happen. If you enjoy the show, please like, subscribe, and if you're ready to take action, check us out at wheelwellprofits.com to learn more about our incredible community. Let's get started.
This is Movers and Shakers, where we interview the upcoming generation of Make It Happen multifamily investors to share their story.
Welcome to the Movers and Shakers podcast. My name is Gino Barbaro, co-founder of Jake and Gino, multifamily investor, educator, father, mentor, and I'm joined by my co-host, my brosif, Joshua Ryan Rusin, community director, Jake and Gino. Hey, Josh, how you doing?
Gino, doing well, man. Excited that things are slowly reopening in the country and to get back to live events. You know, dearly missing all the Jake and Gino community members there, and excited to start reconnecting with them in person. How about you, Gino?
Josh, you can see the tan. I'm out at the beach every day. I'm playing tennis. I'm trying to stay active. And the Jake and Gino community is doing great. We're doing Ask Me Anythings every week. We're trying to stay locked in with the community and just providing a ton of value. And today's guest has been part of the community for a couple of years. And I remember when he joined on, and it's going to be exciting to catch up to him and see what he's doing.
Yes. Speaking of today's guest, we have Derrick Carpenter. So he's a financial services executive with a technology background and operational focus and 15 plus years of experience serving the retail and financial industries. Derrick first invested passively in 2 syndications, and then he bought a duplex to get his foot in the door, and then recently just closed on a 16-unit deal. So listen, welcome to the show, Derrick.
Hey, thanks, Josh. Thanks, Gino. I appreciate you guys having me on.
Of course. All right. So that bio doesn't do you justice. I mean, you're very accomplished in your W-2 career. Let's tell everyone a little bit about that and then kind of where real estate came in the picture and why real estate.
Time out. I want to hear about the family. The family is the most important part. He's got a 2-year-old. So let's dive into the family and then let's go into your finance.
Yeah. No, we're out here in Kansas City, married, 4 little kids, and so the 2-year-old's the youngest and we got a 13-year-old and then everything in the middle. So so we're busy. We're having a lot of fun. We're learning how to do homeschool right now. So we're having a lot of fun.
I'm sure you could teach him homeschooling. If you're a financial guy, I hear the word technology. I'm like, there's a smart guy. He can figure out how to homeschool his 2-year-old. So
exactly. So so background, been in the financial services industry and retail. I started in Arkansas at Walmart as their headquarters out of college, and then have been with Bank of America and Fiserv, which is a financial services organization, and kind of in executive roles, managing product and marketing for the last about 8 or 9 years.
So what brought you to multifamily?
I think I kind of go back to like 2008. We were just getting ready, and we went through Dave Ramsey, and I kind of said, I want to get out of debt. And so I started to get out of debt, and it kind of took me down a path to get my financial life in order. And so that kind of then took me to a move where I moved to Atlanta, and I became a accidental landlord where I was renting my house back in Arkansas while I moved to Atlanta to work for a job. And through that, I said, I kind of like this. I was making a little bit of money. So I added a couple more single family rentals over time. And that was probably 2013, 2014. And at about that point, I said, I'm never going to get to 100 units, which was my goal. I'm never going to have enough time to go find 100 units. And so I said, okay, I'm going to sell these. And so that was probably around 2017. And then as I was doing that, I was listening to Bigger Pockets, and I actually came across, one of your guys' episodes on there, Gino, you and Jake, and you guys always seem like so authentic. And so I said, I'm gonna go check these guys out. And so I kind of got on your guys' website and I read your guys' book. And I said, hey, I think this might be a better way, a better path down the real estate path. And so reached out in 2018. And I think, I was the first client that Josh actually signed up. Like, it was like his first week, and you're like, hey, talk to this guy Josh. and I called him, and he was like, hey, I just started yesterday. He's like, I'm gonna look really good if I sign you up. And so I signed up with Josh. I think it was his first conversation. And so that happened in 2018. And a lot of stuff happened from there, man.
So Josh, I've got to jump in real quick. I'm sitting in my couch last night before I'm watching TV, and I see Derrick's guest, and I come up with this thing called the 4 phases of financial freedom. And for me, it was like an epiphany, because I'm like, Derrick is going down this path. Let me share this with you two real quick, so then you can get an idea. The first phase is to decide about financial freedom. You're deciding about it, and maybe you're adding one layer or one level or just one stream of income, whether it's a single family home, whether it's a duplex. But in this one right here, this first level, this first phase, you're really doing a budget. You're really creating your financial number. And before we got on, Derrick is like, this is what I want to get. So he's already in that planning mode. The second level is, wow, I've got my monthly expenses covered by my passive income. I can quit my job, but it's going to be a little tough. It's going to be a little bit tight, right? Don't know what anybody's numbers out there. Usually people say I need to make $10,000 a month. That's probably level 2. Level 3 is like, okay, my mother-in-law, she wants to come on vacation. I can fly her down. I can go to Disney and not really skip a beat. Want to go buy a car? I can go buy a car. That's level 3 or phase 3. And phase 4 is, hey, I can do the big things now. I can donate hundreds of thousands of dollars. I can buy a jet. I can do whatever. So everybody out there, those are the 4 phases, and it takes time. It's not a one-stop thing where you're going to get rich in the next 18 months. It really is a mind shift. That's what it really comes down to. It comes down to the first phase, which I think is the most important, where you need to really create an emergency budget. You need to have money put aside. So when the pandemic does hit, you have a little bit of liquidity. I was talking to Derrick about it. You need that liquidity. You need 3 to 6 months of money put on the side. You need to create that budget and live within your means. So then when you do have level 3 and level 4, it gets a little uncomfortable, because you're like, I have all this money. Should I really spend it? Because I've been so cheap the last, 5 or 6 years. But that's the plan, everybody. It's 4 phases, and Derrick is in the midst of it right now. And he has a plan. He's going to talk about his 5-year plan, what his goals are. But I want everyone to take that right there and just think about it. How to create your financial freedom. You have to decide. That's the first deciding factor. We can all do this. We just need to pick the right vehicle. And Derrick, I think, has chosen multifamily as one of the vehicles to achieve that financial freedom. Does that make sense, Derrick?
It makes total sense, Gino. I think I was telling you guys in 2008, I said I wanted to set a financial foundation. I went through Dave Ramsey, and that was kind of the path I went down. And we actually became debt free in 2016, 8 years later. No house payment, no nothing, right? And it has exploded my ability to invest, whether it be in real estate, in the stock market, and in all sorts of interesting ways, and to give like crazy. And so I think you're exactly right. That foundation is the step 1, and you got to go after it and get after it hard.
I love that, because personal debt is I think is the biggest form of slavery today. When you don't have that ability, it's the opportunity cost, right? Because you're paying other bills and you're paying other stuff. Everybody out there, a home, a vacation, and a car, they're luxuries. Let's always find out the difference between a want and a need. I want the nice car, but do I need the nice car? We have to make those tough decisions, that instant gratification versus the, long-term effect. And that's why it dives so much well into multifamily, and it's a long game. You have to decide, and you have to get really smart. I commend you on becoming debt-free. That's awesome. That is great.
Yeah. There was a lot of years with no cable, and I was watching Martin reruns on the WB on my little antenna, but that's me and my wife's favorite story.
That is awesome. I love that. So, you get into 2018, you joined Jake and Gino. What were the big takeaways when you joined the community? What did you take away from it?
Yeah. One was the framework that you guys had. It was really simple, right? It laid out a simple framework. I actually engaged you and got some personal coaching, early on. And, we spent 6 or 7 sessions just really talking through kind of how should I go about this, looking at some deals and kind of helping me kind of get going. And so that was a really a good thing too. But, then having, I met so many great people that are doing awesome stuff. John Fortes, Jamie Gruber, Adam Labar, a lot of these guys that are doing a lot of stuff in the community and have gone on to do some great things. I got the ability to kind of engage them and work with them through the process. So that was probably the main thing that I've got out, is that framework, and then a connection to people to help go down a path and understand how to engage, all sorts of third parties. Gino, you've been great about giving me tons of cost segregation people, insurance people, to reach out to. And so I've got a lot of benefit out of that over the last 2 years.
And that's what you want. You want to be surrounded by like-minded people, Derek. Is that what I'm hearing? Like, that's one of the most important things. I actually had a podcast with Brandon Turner yesterday, and I asked him, how should you start? And he said, basically, if you want to be a health freak, hang out with people who are really health conscious. If you want to hang out with vegans and become vegan, hang out with vegans. If you want to get into multifamily, hang out with people who are doing multifamily and not with your mother or your mother-in-law who are going to say it's too risky. You can't do it, right? So I've been down that path. So let me ask you, have you gotten any pushback from any people, especially in the financial services industry? Because I'm sure a lot of them are really stocks, and they're like, real estate's crazy. So how's that journey been?
Yeah, no, I think actually most of the people that I work with in my world, a lot of them want to know how do I go in with you? I've always been a little bit more conservative. I'm like, yeah, I'm gonna go make sure I do this with my own money first and make sure I understand how to do it before I take someone else's. And so, in this last deal that we'll talk about here in a minute, I did have a partner on it. But most people have been, I think, are really intrigued by the idea of real estate. And something different from the stock market. I know you guys always talk about like the roller coaster ride of stocks. And so, what is it going to be there tomorrow or not? And so I think most people are pretty interested and want and have been pretty supportive as far as I'm concerned.
I love that. So, Derek, I want you to write this down, and I want everyone to write this down. Derek is going to start pitching people. He's going to go listen to the podcast that we did on Will Our Profits with Oren Klaff, Pitch Anything. Very important, because right now is a time to start talking about how the stock market sucks and how it's a Ponzi scheme. You don't have to say it in those words, but you know what I'm saying. There's no control there, right? So the four things with multifamily. Number one is cash flow. If it don't cash flow, let the grass grow. Number two is capital appreciation. Number three are the tax benefits. And Derek is being a professional and having people who are making high income earners. Those tax benefits are great. And number four, cycle resiliency. Throw that at people and they'll be like, what does that mean? Well, you know what? In a down market, in a pandemic, real estate and multifamily specifically is a basic human need. Josh, what is it? Food, clothing, and Apartments. That's the basic human need. That's Maslow's basic human needs. And that's really important. So I want everyone to write those four down. As you start creating a pitch and talking to people, let them understand that on a low term. Remember, Josh, we're going from our neocortex, which is our advanced brain, to the person's croc brain. So we don't want to overwhelm them, but let them know this is why I'm investing in it. And I've got great returns. It's a hard asset. The Fed is printing money. There's so much money going out, swashing out there, that inflation is going to occur. And we want to own those hard assets. So I want everyone to write those four down and start using those in your pitch. And, Derek, it's great because he wants proof of concept. And I love that. I did the same thing that Derek did. I had to buy my own assets first. There's no right or wrong reason, no right or wrong answer. What you have to do with what you feel comfortable with. I'm sure Derek could have started with a 100-unit complex. He started with something smaller. What was your thought process about your selecting the market and selecting the size of the asset, Derek?
Yeah. So Kansas City was kind of my backyard. It's where I live, and so I felt comfortable that I knew the city. I kind of knew past the progress where the city was growing, and kind of where the the areas I wanted to stay out of. I started after I'll say it for 18 months I put in LOIs. I walked properties.
How long?
18 months.
18 months, everybody. So I'm not here to tell you, and Derek's not here to tell you to get rich quick, but 18 months to get your first deal, then 3 or 4 months to get your next deal, and then the next 3 years, you're financially free. So those first 18 months may be hard. And, Derek got in at a hard time when there were not many deals out there. But you know what now? Derek has done a lot of the hard work. Now the broker is going to be calling Derek. He got in. It is never the right time unless it's the right time for you. Derek decided 2 years ago it was the right time for him. It was a hard market. There's a lot of money, but there's no deals. Now there's a lot of deals. There's very little money, and the financing is more challenging. So you just have to learn what part of the market cycle, the 3 pillars we talk about. So I'm getting fired up because it's a great point, because 2 years ago, he stuck in it. 18 months of getting rejected and saying, wow, how am I going to do this? And am I doing something wrong here? And I'm glad that Derek joined the Jake and Gino community and knew how to underwrite deals and knew how to tell brokers to fly a kite nicely, because I'm not overpaying on this asset, right? So, discuss that 18 months. Discuss how it was putting in LOIs and telling people that you're crazy, you're not getting a deal. How did that look? How did that feel?
Yeah, we we came out hot. We were all looking at properties, walking them, and I think you learn a lot by walking the properties, talking with these brokers. But yeah, I mean, you were having 40 people walk a property in that, like, they would have these group showings, and so you'd walk them. You put in an LOI. All of our LOIs got rejected. I think we came in second like 2 times. So I started a meetup, kind of as you and I talked about it. We did a video Zoom call meetup in Kansas City. So I got to meet a lot of great investors. But finally, what I finally did after 18 months was I said, you know what, I've got to find another way in here to continue to learn. And so I invested in 2 syndications, one with Rand in Louisville, okay, and then one with Joe Fairless in the Dallas market. And so I kind of looked at it as an opportunity to get an inside view into how the professionals were doing it. And, you guys offered some, like 3 months of like monthly calls to walk through the financials and kind of see how a repositioning was working. And so I kind of took that opportunity to put some cash out, get some assets in place that were producing cash, and learn a little bit through that. And so that was my first step through that process.
I love that. So everybody out there, if you want to go to jakeandgino.com/invest, you can do that. You can invest alongside the Jake and Gino team and become an equity partner, and you're learning while you're earning. When you have skin in the game, Derrick, it makes a lot more, and you really pay attention and you really learn and lock in. What did you learn on those 2 investments as being a limited partner?
Yeah, I mean, I think you learned at scale what different markets, kind of how they operate, the cap rates that people were buying at. But then, you could actually start to get a sense of what always was a mystery to me was like, what does it actually cost to run a property? Like what are because you see these pro formas and they don't make sense, based on the classes that we kind of go through in the Jake and Gino community. So then to actually get visibility to what it's actually costing for property, for make readies and investments in roofs and whether it be the mechanicals. And so just to get a vision into that, it kind of helps you key in on your underwriting. And so that's what I used it for.
Mm-hmm. That's awesome. So you got those 2 LPs, syndications.
Yep.
Probably you can put them on your credibility book, because all of a sudden you're invested in a deal. You start filling out your credibility book. You have your market. You have your team members. You have all your vendors. You have your business plan, your strategy. How did you find this current deal that you took down?
Well, the next thing I did was I said, I'm going to go small. So I bought a duplex, and it was one that I had to actually do a rehab on, because I was like, okay, I want to understand as I'm looking at all these things, I think I'm gonna have to put money into them. So I bought a nice duplex under market price. And I knew I was going to have to kick the people out and rehab it. So that's what we did. We went through that in October of 2019 and knocked that out. I decided to do it myself instead of letting the management company do it, so that I kind of understood what an 800 to 1,200 square foot rehab cost. Mm-hmm. And I also learned that I never want to do that again and manage contractors. So that was a great learning experience. But now I've got the list of like, here's what the finishes need to look like. Here's the cost I should expect. And here's the premium I'm willing to pay a property manager to do a make ready at that level. And so out of that, then what happened was in December of 2019, I was at a meetup with the broker who sold me this one. And she said, okay, I think you're ready to go bigger. I'm going to find you something. And so I called her and I said, okay, here's what I'm looking for. I want a B- property. And she called me a week later and she said, I got something off market. I want you to go look at with me. And so that's how I found this.
Wow. Okay. Before we get into this, I need to recap everything. Josh, get your pen out, because this is important, everybody. Want everyone to write this down. Derrick starts out with single family homes. The next step, he does a financial cleanse. He cleanses himself and he gets his balance sheet ready. He gets the budget going. I wouldn't say that you need to go extreme and completely pay off all your debt. It's a great strategy. Not all of us can do that. I actually utilize my home equity loan as getting into, but so I don't consider that personal debt because I'm buying properties with that. But the financial cleanse is number 2. Number 3, he decides on multifamily real estate. Number 4, education times action equals results. He joins the Jake and Gino community and starts investing in his education. He has skin in the game in his education, and he learns and starts surrounding himself. The next one, 18 months, LOI. It takes him 18 months of pain, getting punched in the teeth, telling him you're crazy, you can't do this, you know what? But he knows, he's got the vision, and he has a strong enough why, because he has 4 children aged 13 to 2, and that's part of his big why in getting out of corporate America. The next one, he becomes a limited partner, an LP in 2 deals. He doesn't have an ego and says, I've got to do this myself. He says smartly, I can learn while I earn. It's really important. It's a great step. And that's like putting your toe in the water. And then he starts getting his credibility book together. The next step, he buys the duplex because he wants to actually get in and figure it out. He thinks big, but he starts small. It's very manageable. And he says, you know what? Let me try it. I'll see how it goes. If I like it, I'll buy more of these duplexes. And if not, I'll scale up. Finally, at a meetup, he's actually out there networking. This is what it's all about. Your network is worth your net worth is. A broker brings him the deal. So is that a good recap of how you've gotten to this point?
You got it, man.
No, you got it, bro.
You got it.
This is awesome. You know, everybody out there, you should really listen to that, because there was nothing really hard about that, right, Derrick? I mean, it was more of the decision making, more of having clarity, more of choosing what you wanted, more of, you know, your family is really important, more of what your goals are. I haven't heard anything on the podcast of Derrick saying, hey, I want to own 1,000 units, or I want to have this. What he's doing is he's setting the goals, but he's falling in love with his actions. He's falling in love with his actions, not his results. He knows that he puts in a lot of work, and it's hard, and it's this long-term vision that it will happen. I mean, 18 months sticking through it, that's the most important thing. So let's continue with the deal. What was exciting about the deal to you?
So the good thing about this deal was, well, one, it was a motivated seller. So
we call that a mom and pop, right? Mom and pop seller. Excellent.
So we got a 60-plus-year-old husband, wife, and kind of a degenerate brother that owns this together. And the husband and wife don't like the brother anymore. And one of them has health issues. And so, yeah, it was this whole idea. And
wow.
So they at one point, they were a really big investor in Kansas City, but they had kind of gotten to a point where they wanted to get out of the game, and this was their last property. And so we had a good motivated seller. So that was step one. Step two was all of the tenants and residents had been there for 10 years, almost 7 to 10 years.
Wow.
This was and they had never raised the rent on them. So market rents were in the $1,200 a unit rent. And this was probably a B- level property. And that's kind of what I was looking for as we went into this market cycle. But many of these rents were at $750 to $800 and $890. That's like where the range was in the current tenant base. And so we saw a lot of upside there with a pretty light rehab of paint and flooring, really.
Wow. So everybody, I got to recap that again, because it's really important what Derrick said. First thing, he talked about a mom and pop seller. If you don't have a motivated seller in any market, you're really not going to get a deal. You need to have some type of motivation. And we teach about mom and pops. He had partner infighting. He had health issues. He had burned out landlord. I'm assuming they probably might not even have had systems in place where they maybe no website. See, I can read it without him telling me. So he's smiling because he's like, wow, this stuff really works. I mean, mom and pops really work, right? And I love the fact
it's a pain to underwrite it when it's a mom and pop because they got nothing.
So let's talk about that real quick. What's even better about that is it's hard for other buyers to be out there. So you have to be persistent on buying the asset, because you have to start making stuff up, and you have to be like resilient on it. Most people will quit, but after 18 months of putting in LOIs, you knew what a deal looked like. That was the important thing. The next thing is the 7 to 10 years of tenants living there at the same time. I mean, that $300 to $400 in rent, you identifying that right away is really important. There's that's what we call a value add. That's a massive value add. The next thing that Derrick mentioned, I don't know if people realize that he's talking about market cycle, the 3 pillars of real estate. It's market cycle, debt, and exit strategy. He knows in this part of the market cycle that B property is really good, because if values do go down, it's okay. He's holding an asset that doesn't need a ton of capital expenditure requirement, right? And then on the flip side, he's going to add value on this property tremendously by increasing those rents. So that is all super exciting. You hit the framework to a T on this one, my friend.
Yeah. And one of the cool things we did, which I had never thought about this, but our broker said it was, there was one unit that was empty and one person was moving out. And I said, well, let's prove the model. In the contract, we said, I want, instead of you using your crappy way of putting a new person in this tenant while we're closing, I said, I want our broker to fill these units. And she just went out at $1,250 a month and filled them both in a week and a half.
Oh.
The two empty units while we were in the middle of due diligence and closing. So we proved the model while we were closing.
So cycle resiliency and limiting your downside risks. That is really awesome. And, everybody out there, Derrick could have said, you know what? It's in the middle of a pandemic. I don't know what's going to happen with rents. Should I take this chance? Should I not take this chance? When you have a deal like this, sometimes you just have to say to yourself, I need to take the chance. What was holding you back? Because I had a couple conversations with you, and what were your fear about closing on this deal?
Yeah, I think it was just that because the tenant base was not well managed, that we didn't have clear visibility to even what the makeup of it was, and whether or not they would pay, in April and May. And so that was our biggest risk. But we also said I had a partner in on this deal with me, and we kind of came back, and we at one point we did back out. We were like, okay, we're going to back out. We told them we want to extend the due diligence 30 days to see what happens. But they kind of said, we don't really want to do that. And so we slept on it, and we came back and we said, you know what, we're willing to take the risk. Let's go. And we've had everyone pay except for one person on both May and April already. So we're doing really well.
So Derrick, can you explain to me the feeling that when you finally find this deal, it's like, does this work? I mean, I can't believe it after 18 months. What is that feeling like?
It's great. I'm constantly, like, it's funny. I actually go into the property management tool we have a lot of times every day, and I'm like looking at it, I'm like, oh, the numbers are actually working out better than I actually had projected. So I'm like, oh, this is awesome. Maybe we can find another one of these. But I'm like, okay, let's get through the pandemic, and then let's reevaluate.
I love that. So you're already looking at the next one. So on this one, can you just share some numbers? You said it was 16 units.
Yeah, it was 16 units. We purchased it at 1.6 million. This is a 2002 build.
Oh, nice. So it's really nice.
I mean, so it's a lot newer. It's in a great neighborhood. It's a row of like townhouses at the end of a residential neighborhood that's right up next to a school. So we feel really good about that. The rehabs are going to be pretty light. We were able to work with a community bank, and we locked in a 10-year, 25-year amortization loan at 4.3%. During the, we did a couple things as the pandemic came on, because we closed on March 25th. And kind of everything started shutting down the week before.
Yes.
So we called the bank and we said, hey, what can you do? And so they lowered our rate from, 4 point, I think we were at 5 to 4.3. And they also gave us an additional 2 months of interest only, to help us get a little bit further down the road. We were at 4 and we went to 6. We also then got the sellers to agree to guaranteeing and escrowing the first month's rent, April's rent, in an escrow, and then whatever didn't get paid in April by the 15th, that portion would be cut to us and they would get the remaining back. And so we kind of built in some things there to help us protect ourselves.
Wow. So there's a few more learning lessons, Josh, on this one. This is great. The first thing, about $100,000 a door. This is probably about $30,000 to $40,000 below replacement, correct? I mean, you can't build these things for $125,000 to $130,000. So Derrick bought it right. So the buy right is great. $100,000 unit, you're going to be getting $1,200 a month in rent, plus probably rubs or plus anything else. So you can see that those numbers work really well. I see refinance and roll in the future going to agency. I can see that in the next 18 months, because let's say you want to utilize that you have interest only, so you want to utilize that, maybe burn off some of the prepayment penalty, but you're going to go to a 30-year amortization, maybe pull it off your balance sheet and go to non-recourse. This is exactly how Jake and I started. We started with recourse loans with community banks, and everybody out there, community banks are going to be strong in the next 6 to 12 months. Owner financing and community banks, because they're great to work with. But you start somewhere, and your progression is going to be in the next 18 months, you're going to refi this thing out, pull your capital out, and that's how you go on for your next deal with that money. The other thing is, the biggest lesson learned, everybody, what did Derrick do? Derrick asked the bank. He asked the seller. And the hardest thing that people do is they think it's you go to a bank and they have all the leverage. No, we have the leverage on this situation. If you ask and you ask, it's not crazy stuff. What can you do for me? That's a typical Chris Voss thing. You can throw in your accusation audit by saying, hey, Mr. Banker, the pandemic's coming. There's no deals out there. That's the bad news. The good news is I've got a deal here. What can you do? So those are some really, really amazing lessons learned that you're pulling through here on the show. Any other lessons learned that for you as far as people out there, saying, hey, how did he pull this thing off during the pandemic?
Yeah, I think, part of it was we assessed kind of the whole situation. We also made sure we were ready in the financials to put enough capital up front that we could carry months if we needed to. And so we had built that into the model pretty conservatively on the buy. So I think that part gave us enough comfort to say, okay, I think we can move forward. We feel really good that we've got enough cash in the bank to make it through whatever period of time we would need to.
I love that. So we have a blog on jakeandgino.com that has 15 lessons learned. And that's one of the big lessons, Derrick, is having those reserves, having CapEx to weather the storm. So it's really important, everybody out there. Your returns may be lower in the short run because you're going to have to put that reserves on the side, but prove it with your model and you'll be able to sleep at night. So if you do something does happen, man, you can really weather the storm. Let's take a quick time out to hear from our sponsors.
Is your money working as hard as you are? At Ram Partners, we partner with hardworking investors who are seeking true passive income through multifamily real estate. Partnering with Rand means transparent communication with our webinars, monthly statements, and newsletters. For more information, visit randpartners.com to register for our investor portal and to set up a call with our team.
All right, Derrick, got some short answer questions here for you. So what would you say your best habit for success is and why?
I think, man, I would say I'm an early riser. That's, being a kind of a corporate executive type role. I've had to create time, especially with little kids. Anyone that has them, they inconveniently wake up at like 6 a.m. every morning when you think you're going to get that hour of your own time. And so I've got to get up like at 4 so that I can get the workout in and then get to doing any of the things that I might need to do. So I'm an early riser, and I think that's where I kind of get the priorities that I want to lock down done in my personal life.
Love it. What about your favorite book?
I'm a big fan of The One Thing by Gary Keller. It's kind of, I use it in business, in the Fortune 500 world that I work in. It's kind of my core thing. I manage my personal life that way. I think focus on the most important thing and not trying to spread yourself and doing everything like in a half-ass way is where I really focus. So I think The One Thing is a great book that kind of drives a framework to think about how you actually attack your goals. And so I'd recommend that very highly.
Great book. Gino, I'm going to let you sum up some of the golden nuggets in this one.
We're not finished yet. I'm not finished with Derrick. I got a couple other questions for Derrick here. One thing, I hope that 4 phases of financial freedom really resonated with you. Can you just share with me and with the audience, where you see yourself in the next 5 years? Share your goals with us.
Yeah. So I have a kind of a plan where I'm probably going to work for another 5 years. I'll be 45 in 5 years. And so, my kids will still be, I'll have an 18-year-old, she'll be going off. And so part of my why is getting to be able to be with my family. I travel a lot for work. And so I want to try to like free myself up and create enough passive income. I was telling Gino before the show, I really have a plan this year to get to 70 assets in place that will generate $75,000 passive income. Not that maybe in year 1 they will, but once we work through our repositioning, I would have assets in place to create that. And then, work through what is my 2021 plan, my 2022 plan. And then in 5 years, have enough to exit corporate America and hopefully live, maybe not in the baller lifestyle of that Gino said, where I have my own private jet, but hopefully I can be in level 3 and really be able to take my mother-in-law and fly her at the back of the plane with us when we go on vacation.
That's awesome. So the plan is in place. I mean, like you've already worked the plan out. Everybody, it's important that, Derrick mentioned the one thing, and that's where he gets it all from. His focus is hyper focused. He's focusing on his assets, and he's focusing on his assets being redeployed and creating the passive income. And it doesn't just have to be multifamily. I think it's the most amazing vehicle. We talked about whole life insurance. We talked about the stock market with Derrick. We talked about different assets. I think just deciding on what vehicle you want is the most important thing. And we'd mentioned, I think multifamily is one of the most important. I've got so many things, Josh, that I want to mention here. I want to recap a lot of the stuff here because it's really important. Let me mention Derrick's journey. I've got it all written down over here. It's amazing. Single family home, to a financial cleanse, to deciding, to educating, to being an LP, to buying a duplex, to going to a meetup, getting a mom and pop. That's amazing. That's an amazing journey. It seems so simple. It is, but it's not easy. There's a lot of work involved in there. There's a lot of rejection in there. 18 months putting in LOIs, but having that strong and having that focus and having that determination, having that strong enough why is what got Derrick pulled through this. And now I will guarantee you this first deal, going through the pandemic and working through it and being creative, it's only going to give him strength to get into a second deal. And he has the I don't know how to say this, the kudos to say to investors, I closed the deal during the pandemic and I bought an amazing deal. So can you imagine when things normalize and stabilize? I've got the proof of concept. I went from a duplex to a 16 unit to what now I can go to 100 or 200 units. So everybody out there, follow that framework. Follow the buy right, the manage right, and the finance right, and follow Derrick's framework to success. Josh, what do you got for me, bro?
Love it. I think one big takeaway there is if you're going to run a business, you have to control your personal finances, because if you can't do that, to think you can run a business with finances, it's going to be a challenge. And then the difference of good debt and bad debt. So like Derrick said, he went through and got rid of that, right? And then you got to recognize, even with Dave Ramsey, he wouldn't recommend getting in all this debt. There's debt that makes you money. So that's a big differentiation there. So those are some of my big takeaways.
Derrick, any final words?
No, I really just appreciate you guys having me on. Gino, you guys have been great, super helpful. The community's been awesome. And I appreciate all the stuff you guys are doing.
The community is only as good as the people in the community. And as everyone can see, Derrick is a high level, highly intelligent, highly motivated person that makes the community great. So communities are only about what people are in it. So I'm really proud and I'm really honored to have you part of the Jake and Gino community.
Thank you.
Love it.
Appreciate it.
Derrick, how can the listeners get a hold of you?
Oh, I'm on LinkedIn. You can find me on Facebook. I'd say those are probably the two easiest ways.
All right.
Got it. Well, I want to thank you for being an amazing guest on the show and sharing your Movers and Shakers story. Now, listen, if you want to be the next Movers and Shakers guest, email me, josh@jakeandgino.com. And if you like the show, please leave us a review. And until next time, let's make it a Movers and Shakers week. See you, everybody.
Thanks, everyone. Thanks, Derrick.
Thanks, guys.
Hey, Gino, the two most common questions I've been asked are, how do I get into real estate and do my first deal? The other question, how do I scale my real estate portfolio? Well, gang, we have great news for you. Gino, tell them about it.
We can help you answer both of those questions. At jakeandgino.com, we offer a variety of micro courses to help you along your real estate journey. Our proprietary 3-step framework has helped hundreds of real estate entrepreneurs successfully get started in real estate with no experience, and it has also helped experienced real estate entrepreneurs take it to the next level.
If you want more information, visit www.jakeandgino.com/courses. That's JAKEANDGINO.com/courses, and use coupon code PODCAST for 20% off your purchase on taking the next step in your multifamily journey.